Guys, I'm a simple guy. I'm a simple guy. I told you guys so many reasons to be bullish on Apple. I told you guys the exact reasoning why I would be bullish on Apple. Multiple different reasons. I said I would be very, very bullish this week. Ended up bouncing really, really dramatic. While we're here, let's take a look at the recap so far of my trades this month. Out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trades that we've taken, only one of them didn't. So, not perfect, unfortunately. But this is the type of quality. I'm on live stream. I'm on voice chat. I explain my exact reasoning and detailed reasoning why I enter and exit every single trade. Clearly, something is working. And been working for quite some time. So if you guys are interested, the link is down below. The link is in my bio, in the comments, all that good stuff. If you guys want to learn how to trade and be a part of a community of people that are trying to become better traders, clearly this is the community for you. So I hope to see you guys there. Now, moving forward, we basically have to see what the next steps are for the market. Clearly, we saw a big pop out of chips. We saw a big pop out of tech stocks in general. I was not bearish at all. I was leaning long. So I'm going to give you guys a bit more of a rundown in today's video of what I think will happen next. And yeah, it should be fun. All right, so we're going to take a look at the large tech stocks. We're going to take a look at the SP500, the NASDAQ, the Russell. Of course, we have to take a look at the dollar, the VIX, the bond yields, all that good stuff. All right, so without further ado, let's get started with the video. All right, so at the moment, the large tech stocks got really strong. They got a very strong push. So NVIDIA and AMD specifically did very well today. NVIDIA, you can see, reclaimed. Let's just zoom out and look at how important this trend line is on NVIDIA. So when we zoom out, this trend line has acted as support since this uptrend back in January, so of 2023. So we ended up creating a support level here, came back to it, bounced off of it here, bounced off of it in April, and then it catapulted up. Then in September, NVIDIA was holding this level of support while the market was falling lower. NVIDIA held this level, and the fact that it held and started to bounce gave strength to the overall market. That caused the market to also bounce. And then basically moving forward, it's been acting as a clear level of support and resistance the entire time, right? So what's interesting is that we just reclaimed that level. And you could see that from a technical standpoint, we just closed above it. So they could have chose to not close it above. They deliberately chose to close it above this level to denote, in my opinion, a lot of bullish strength. So tomorrow, just for the sake of understanding, this level of support for tomorrow for this trend line is 520. And essentially, NVIDIA and AMD had a very strong move to the upside. We're currently holding on to February SOXL calls. And those are up, and things are looking good for these as well. But in general, it's very difficult to try to fight clear-cut bullish strength. All right, unless there's a given reason to do so, it's very difficult to do so. So one of the things that you could see today is if you were to look at the SPY, for example, on a 1-minute time frame, right? If you guys were watching the market, we were very overextended. Lots of overextension, right? Clearly, right? Just a gut feeling would tell you, okay, we have to get a pullback. We have to get a pullback. We have to get a pullback. But if you've learned, that's not always the case, especially with a lot of strength in the market. It doesn't always end up pulling back. So what ends up happening is you keep on trying to average up without any pullback. And specifically when you see a lot of strength in tech stock, it is very, very detrimental to your portfolio if you try to short the market, especially with the leaders of the tech stocks, which were the AI chip related companies that were showing a lot of bullshit. So we can see the SPY was up almost 7 points today, $7. And clearly we didn't get any pullback. Technically, right, from a technical standpoint, we should have gotten some sort of a healthy pullback, but we didn't. And sometimes that ends up happening. So this was one of those times. And I hope the issue, right? The issue with this sort of price action is that it's difficult to start leaning long in the short term with these sorts of trades, because your gut is telling you that you should be getting a pullback, and going long after like the market has already skyrocketed is very, very difficult. So you end up missing trades. So it is what it is. Like, these sorts of setups are very difficult to catch to the upside. And essentially, you can't really rely on the market to just be on cloud nine. So catching these moves to the upside is also very, very difficult. That's why it's much easier to buy into swings longer term out. If you think that there's going to be momentum, day trading to the upside is very, very difficult. Swinging for at least 1 to 2 weeks out is much easier because you have wiggle room and you have a cushion. So yeah, this is just one of those days where we see a lot of buyers, and it is what it is. Hopefully you guys didn't get caught shorting this. We didn't, which is nice. So this worked out. So, you know, I hope that makes sense. Not every day is going to be technically perfect. So what we could do is take a look at the rest of the large tech stock and to see how much more room there is to the upside. So Google clearly is at a level of resistance at 141.50. We failed, right? And 141.50 is going to be a major level of resistance moving forward. But, you know, with the market green, Google obviously did well as also. Let's take a look at Microsoft. Microsoft clearly did well also. We could see that it broke above its local levels of resistance here. Amazon did very, very well as well. Amazon, so beautiful. It held this level of support really, really well, and it bounced. I was saying Amazon was going to be a really good play. We didn't end up taking that. I also really liked Meta intraday. Meta looked really, really nice. It looked very, very strong. I wanted to get into some swings on Meta. We didn't end up doing that because we were already long Apple and SOXL. I didn't want to over allocate to the tech stocks, but Meta is really, really good trade as well. I think it could continue rising and have room to 367 on Meta, in my opinion. Tesla is, interestingly enough, not bouncing. Tesla, with a nice tight stop loss, if you want to play longs, Tesla has, clearly you could see it has room to go to the upside. But you can't, so here's the thing. You can't put your money in losers thinking that they're going to have the same potential reward as the winner. So Tesla clearly has room to the upside, right? But it doesn't mean that Tesla is going to bounce as aggressive. The hope is there, right? But the only way that Tesla is going to get an aggressive bounce is once NVIDIA, AMD, Meta, these other winners start consolidating. Once they start consolidating, that's when the money starts funneling into the losers. And yeah, so we're gonna have to see when that happens. But Tesla and Meta looks really, really good. It's way more bullish in my opinion than Tesla is. But both of those have more room to the upside. Netflix obviously did very well also. We took a look at Microsoft, Google, large tech. Yeah, so essentially all of these large tech stocks are showing clear-cut bullishness. They are all showing closes above the 618% fibs. which denotes bullishness. And if it was a bear flag, right? So bear flags are obviously bearish, right? Bear flags are obviously bearish, right? Once you get a close above the 618% fib on bear flags, the odds of it being a bear flag drastically reduces. So how you can check that is you look at the most recent highs to the most recent lows. You see that, you know, these stocks got closes above the 618% fibs. So clearly, you know, the stocks that have not yet done that have more room to the upside. But the thing is, in my opinion, there, regardless, right? Regardless, there is a lot of buyers in the market. There are a lot of buyers in the market, especially on tech. So, this is just a ridiculous amount of buyers that we saw today. And one of those days that if you try to short based off of technicals, it doesn't work out because there's a lot of buying pressure. So we clearly on the NASDAQ, we broke out of this falling wedge. It stopped. So my analogy yesterday about Spider-Man stopping the momentum of the freight train ended up holding true. And this was predominantly helped by the overextension to the downside in Apple. Because Apple was so far overextended to the downside, it gave a high probability chance that a lot of buyers would step into the NASDAQ. That's what ended up happening. The NASDAQ was the biggest winner today. NASDAQ outperformed the IWM and the SPY clearly. But what's interesting though on the NASDAQ is we have not yet closed above the 618% fib on the Qs. So we did close above the 50% fib, which is still very, very bullish. Regardless, though, it is difficult. Regardless, it's very difficult to start entering long on a big move to the upside. What you're going to have to do is you're going to have to get long for at least with some time. Once you get long with time, you're going to have a tight stop loss. Because, so here's basically what I would do. If for some reason, all right, so here's what I would do if I was very, very bullish on the NASDAQ. I want to see 402 and 403 hold. I want to see this zone of support hold. If we end up breaking below 402, then we can easily see and crack below 400. So if I'm a bull, right, I would be going long with at least a month out, hoping that 402 to 403 hold. That's essentially what I'll be doing. And if you want to be aggressive, right, going long here after a big move to the upside is generally aggressive. If you want to be aggressive, you need to basically make sure and hope that the 38.2 holds. So the 38.2 from the most recent low to the high holds, or the 38.2% fib of this candle hold. So the 38.2% fib of this big green candle is 402.40. So once again, I would want to see the 402 to 403 level hold. A retest of the 38.2% fib is still very bullish. We could still easily rip to the upside. If we end up breaking below and closing below 402, then the oomph, the psychological bullish momentum could also subside. And that's not what I want to see. So that's what I would end up doing if I was late to the party and if I want to be long on the NASDAQ at this point. And that's essentially what I would do if I was bullish with anything. That's essentially what you do. All right. So clearly, we just need to see if you're bullish, you want to see the NASDAQ hold 402, 403. Very, very difficult to be bearish, especially after you see so much institutional buyers into the NASDAQ. So be careful, right? Also, you have to realize, let me just show you guys. So this is a chart of the seasonality for the SPX, and this is January. We end up getting a strong push to the upside historically into the middle of January. So we're still in the first 10 days of January. Still next week left to go. So we still have more room to go to the upside, especially this week. There's no macro news until Thursday. And then Friday is when the big banks begin to report earnings. So there's still a lot of bullishness left to go. So the momentum clearly on a daily chart is bullish. And just keep that in mind when taking a look at the SPY. This clearly broke above the 7.86% fib. This is really, really bullish. And almost 7.86% fib. It closed above the 6.8% fib. And this is really, really bullish. Ridiculous, strong green candle. But once again, we're back to these same levels of resistance right here. Very, very simple. You have to trade and you have to scalp with prior important levels of support and resistance. So this level from December 19th, the high here, clearly acted as resistance today. And that's what ends up happening. Prior levels of order flow of where there are a lot of buyers and sellers act as levels of support and resistance. So you have to scalp and trade along those levels. That's why looking at prior levels of support resistance is very important. So clearly 475 is very important psychologically. Then the 477, 478 areas also. And basically then, yeah, no, we just have to see if we can break above 477.50. But essentially, we see a green light. So again, what you want to see if you're a bull on the SPY is you want to see the 38.2% fib of this big green candle hold. And that's going to be around 472, which coincides pretty perfectly with the 50% fib of this move to the upside. So the local high to the local low, the 50% fib is 472. When you take a fib of the green candle from today itself, the 38.2% fib, which I explained on the NASDAQ, is very important. The 38.2% fib on the SPY today coincides perfectly with the 50 on the larger pattern. So 472. So again, what you want to see is you want to see 471 to 472 hold on the SPY. And that would essentially, ideally, right, the most bullish case on a continuation to the upside is if the 38.2% fib can hold of this green candle. That is the most bullish case. That's going to be at 472.30. So keep that in mind. Really ridiculously bullish. The IWM did not get as much love, and Tesla also looks very similar to the IWM. The IWM got a lot of love into the end of the year in December because of the Fed pivoting and basically saying that they're going to start cutting rates. So obviously, when the Fed signals that they're going to cut rates, it helps growth stock. So growth stocks meaning tech, meaning basically the companies on a longer term horizon that can develop the economy and that can bring substantial growth over the next 20, 30, 40 years in the country. Banks are more stagnant in their growth, more steady, but which is why they're value related stocks, right? But growth stocks have a lot of exponential potential. So that's another reason why the NASDAQ is doing so well. And we can clearly see that. That's why the NASDAQ is outperforming. So, yeah, so essentially, again, so for a continued bullish move on the IWM, we want to see the 38.2% fib hold. 38.2% fib is going to be at 195.20, and which also coincides with the 50% fib of the most recent move that we also had on the IWM. But 195.20 is basically where you want to see the IWM hold if you're bullish. So just keep that in mind. Keep those three levels in mind. We're not seeing that much out of the dollar and the yields, but we have to take a look at them. So the dollar clearly, not much movement. We can't get a good gauge on what's happening on the dollar. But it's important to generally look, because the dollar has an inverse relationship to the market. The dollar is rising, then the overall market should be falling. We're not getting that good of a signal on the dollar. We're not getting that good of a signal on the yields either. The yields also have an inverse relationship to the market. If the yields are doing well, the overall market should be falling. Clearly, we had a red day. We retested trend line. It's not really giving that much of a signal here. But then the VIX closed back below 1350, and it's holding 13. The VIX also has an inverse relationship to the market. And when we're trading below 1350, below 14 on the VIX, it's very bullish. If we can break below 13 on the VIX, then that is very, very bullish. But overall, also have to keep in mind that heading into earnings for these banks, we could really be bullish as well. So, because they have earnings run-ups. So earnings run-ups heading into Thursday. Thursday specifically, we could end up being very bullish as well on the XLF and different bank-related sectors, bank-related stocks, and the IWM. So yeah, today was really good. We played the market really perfectly, and things worked out really, really well. We had a plan. We stuck to the plan, and we did not allow our egos to dictate our trading. Because technically, this was a really, really bad technical setup. We should have gotten pullbacks multiple times. There were multiple occasions where we should have gotten a pullback. Never did. This entire time from 1 o'clock all the way into the close, there was no pullback. For almost 3 hours, we didn't get anything. And that's why it's important to understand that this was happening for the past few weeks. We were having these large, extremely bullish moves in the market without getting any substantial pullback or any technical. There was a technical discrepancy in the market. And that's why it's important to keep your ego at the door, not trade with an ego, and follow the trend. It's difficult. Obviously, you're not going to catch all of this move to the upside if you're day trading, because that's also technically not a good trade to take. You are trying to. In these instances, you have to be very, very tight with your stop loss. But it is what it is. It's better not to short an aggressive move to the upside. And if you do, you need to have clear-cut stop losses in either direction. So overall, really good day. Can't complain. Really good month so far. And yeah, things are working out really, really well. So if you guys enjoyed today's video, please make sure to like, comment, subscribe, do all that good stuff. Once again, I live stream daily on the Discord. I have voice chat, type in the trades, and yeah. So hope to see you guys there. I will see you guys bright and early tomorrow morning. Thank you.